So welcome back to my website KE. Let's look at risks, tax and strategy for the EABL board. We are still on corporate board. My name is Peter Chage. You can get full recording on my YouTube channel, my website KE and Gentasad Studio. So is it safe to invest in this EABL board? One, it's regulated by CMA and NSE. So you're assured of the security of your board. It is trading at NSE's corporate bond market. However, the board is unsecured based on the prospectus given, but that does not mean it's unsafe to invest in. Remember, EABL is backed up by its financial strength. It can handle default on that amount, so it is safe to invest in this board. So however, there are risks to note when investing in corporate board, and especially this EABL board. Interest rate risk. If you plan to sell in secondary market after listing, then you may need to check interest rates. If rates rise, then the prices will fall. You may end up selling at a lower price, and you fail to realize the capital gains. Then early exit risks. When selling early, it means you may sell at a lower price than holding until maturity. Remember, when you hold to maturity, you are guaranteed full interest for those years, 5 years, paid semi-annually. And at the end of it, you receive your principal back. Hopefully, by 2030, most of you will have held their board. Then there is a tax you need to understand. When you hold this to maturity and you're receiving interest, that interest is subjected to 15% withholding tax. It is not you who pay, it is deducted at the source by the registrar who is image registrar, then they pay directly to KRA. So on your side, you don't need to declare anything. So when you're calculating interest, remember to factor out withholding tax. So you get net of that. However, when you decide to sell on secondary market, there is no capital gain tax. You don't declare that. However, you are subjected to 16% withholding tax. And also there are broker charges. That's why selling in secondary market is a bit risky, and you may end up realizing capital loss if you don't factor out some of these charges. So the interest is paid directly to you, and it is taxed automatically. You don't need to file anything. There is no tax you file at NSE. It's the brokers and registrars who does that, even for dividends. We are headed to election period. So do you still want to buy shares when market may be volatile? No. This is the time to get into EABL board, invest your money there. Then the interest that you are getting, that time after 6 months, market will have gone down. You have noticed most of the prices are up. So when you receive that interest, market may be down, buy shares. However, if shares prices are still high, you can put your money into money market fund and some interest as you watch the market. That is for those people who are worried about prices. But if you're investing for dividend, then I would advise get into this board. The interest that you get, put in shares, get dividend. Or you put in money market fund, you earn interest. What does that mean? You're using your principal that you have given to EABL to earn free money interest. Then using this free money, you either buy dividend shares, which gives you another free money which you can reinvest, or you go to money market fund and earn another free money through interest. Then you can invest that interest into shares. That's how smart people work. Don't try to compare the board with money market fund. Eventually you end up going to money market fund, which again, there are hidden fees. So invest in this board, get your interest, put in money market fund or shares. When you get interest from money market fund, return to shares. Or if you get your interest from, when you get your dividend, reinvest again. Remember to subscribe to my YouTube channel, and thank you. Let's meet in the next one.